It's time for Ask Annex. Got a question? You head to our website, annexwealth.com. In the studio, Fred Coleman, a CFP and a wealth manager at Annex Wealth Management. Welcome.
Thank you, Danny.
And we got Matt Morzy, investment team manager. Welcome to you.
Thank you, Danny.
First question. I have a Roth account from my previous job. I contributed to it for about 5 years. Currently have a newer, more stable job with a 403B. Do I keep the money in the Roth or should I transfer it over to the 403B? Are there other options/considerations? I appreciate any other advice.
Congrats on the new job. The first thing you have to keep in mind is that the Roth is after tax. So that means you already paid taxes on it. So we want to keep the money in some type of after-tax investment vehicle. So the first thing you do, look at your new company's 403B plan. Do they have a designated Roth account? Once you figure out that they do have a designated Roth account, figure out what are the investment options and do they make sense for you to roll that previous employer's plan into that 403B. If they do, then that could make sense. Employer plans are typically lower costs and the funds can be difficult to access. That's the only thing you have to think about. The other option is a Roth IRA. Roth IRAs are going to be far more flexible than workplace plans, and you're going to have far more investment options. With Roth IRAs, you can invest in just about anything, and you do have a little more ease to access the funds.
Next up, I'd like to invest my HSA. What's the best way to find a suitable fund?
That's a great question. I love HSAs, so that's a great place to do your investing in as well, too, due to all the tax benefits you get there. First thing to think of, almost like with the 401k, 403b, is that you're going to have a limited options of the funds that are out there. So you're probably going to start with a small amount to really even review. First thing I would look at is how active do you want to be in it yourself? Do you want to manage it? Do you want somebody's help managing that? When you're looking at, do you want somebody's help, whether it's somebody like Annex, which we can help provide suggestions for you, or that they're going to have a series of target date funds where you can control what risk you're taking based off of how far out you go from that and what the purpose of that HSA is. If you think you're going to be accessing some of that cash relatively soon, you're probably going to want to stay pretty conservative or have a higher cash balance. If this is something that you're younger and you're thinking you're going to keep it for retirement health spending, you probably want to get pretty aggressive on it. Outside of target date funds, a lot of HSAs really just have index funds, so you have to create your own allocation at that point in time, but at least you're not trying to vet active managers. But ultimately, for a lot of people, the target date fund's really a great option there.
Next up on Ask Annex, we're going to blend families in early 2024. My spouse and I have good income, significant assets, and some minor debt. Is there a playbook for combining assets? My friends suggest we wait a year to let the dust settle and determine spending habits.
I wouldn't necessarily recommend waiting a year to determine the spending habits. I think this should be done as soon as possible. This doesn't mean that you need to combine all of your assets, but you should start to put a plan together because it could just take a long time just to get on the same page. But if I had to think of a playbook, here would be a quick playbook. You want to work with your spouse to come up with an emergency fund. These are funds that both of you put aside. You don't touch, keep in cash, just in case one of you lose your job, another emergency comes up, you got to pay some bills, hospital expenses, any of those things. You also have to keep your retirement account separate. So you're going to continue to invest in your 401k on your own, your IRA. So those things are going to remain separate. You don't have to worry about those. I would recommend also opening up a joint investment account. This is just for you two to get together, start to develop some goals, and it could be as simple as putting $100 per month in there or more. Just have a long or mid-range term goal. Start to combine your savings. Last, each of you should have just separate accounts for regular everyday things that you need to do. That could be buying a birthday gift, going to a sporting event. Those are the important things to keep separate. But the main thing is not necessarily making sure that all your assets are combined, just making sure that your plan is all as one.
Last question on Ask Annex. Besides an emergency fund, how much cash should I keep at home? That's a great one.
Yeah, it really is. And it really depends on how you spend money. Myself, my wife, and I, we put everything on our credit card, pay it off every single month. So we really don't use cash at all. We have a little bit of a petty cash so that when we do receive cash for something, we put it in an envelope in our house and either one of us can get at any point. Frankly, we've got two small kids, 6 and 9. So most of the time that cash just goes to paying babysitters. And really the only time we ever access it at all, frankly, our kids probably have more cash at home than we do, just from getting money from the Tooth Fairy and from birthday gifts. So they really are the ones that have cash in our house. But we have everything ourselves in our checking account. We pay off our credit card every single month, but we put everything on there. But if you're somebody who likes to use cash to do your normal spending, then I would look to see how much you spend, in between paychecks or once a month and just kind of see what you go through and have that much available.
Yeah, and the one thing you got to think about with that is just inflation, right? If you put $1 underneath your mattress a couple years ago, you're not going to have the same purchasing power that you'll have today. So just something to keep in the back of your mind.
We all get that fantasy of like taking the picture off the wall and there's the hidden safe, and then you open it, it's got $10,000 in there. I've got a safe, and I open it sometimes, and I have $40 of cash. So it's my own little version of it. That is Ask Annex. As always, you got a question, you head to our website, annexwealth.com. You click the Get Started button. Matt Morzy, Investment Team Manager, thanks.
Thank you.
Fred Coleman, CFP, Wealth Manager at Annex Wealth Management, thank you.
Thanks for having me, Danny.